All right, well, welcome back to the channel. My name is Dwayne Cavanaugh. I'm a licensed mortgage agent with Mission 35, and I have a very special guest for you today. I have a real estate lawyer, and a lot of times people say, oh, I don't want to talk to lawyers. You want to talk to this guy, especially if you're buying a home. So I have Rashesh Mandani here from Mandani Law. Rashesh, why don't you introduce yourself and tell us a little bit about you and your practice?
Yes, thank you so much for the kind introduction and for having me here today. My name is Rashesh Mandani, and I'm a lawyer, and I practice out of Ancaster, Ontario, but I service clients all over Ontario. We do real estate law, wills and estates, and corporate law. And today I'm here to help answer your questions with regards to real estate and what does a real estate lawyer do, and what's our job, and what do we help protect our clients for?
Well, that leads us into that first question. I think it's a doozy. Talk a little bit about how a real estate lawyer can help in the home buying process.
So a lawyer is fundamental to the entire process. We actually take on the obligation to make sure our clients are protected. So when it comes to using a lawyer in Ontario, you're not required to use a lawyer for any transaction other than a real estate transaction. And that's because one, the amount of money that's involved is quite high compared to any other type of transaction. And two, a lot of things can go sideways, and we have to make sure that people are protected and that there's no fraud and money is being transferred properly between parties. So some of the things that we do, usually people come to me after they've signed an agreement. I would say it's usually better to have your lawyer involved before you make a deal and before you sign a deal, because as a real estate lawyer, I can watch out for clauses and terms that I think are unfair, or things that you might have forgotten about. Or, there's a lot of pressure, particularly when the market was really hot. There was a lot of pressure from realtors that you shouldn't put in a home inspection because the offer is not going to be accepted. Legally speaking, I would always tell my clients to inspect what they're going to buy, right? Even though that means that they might be outbid by someone who doesn't want an inspection. I just think it's a big risk not to do those types of things. The second thing, so after you've done the agreement and you've entered into the agreement of purchase and sale, the lawyer's first job is to investigate title. So we have to check if there are any liens on the property, what are the mortgages on the property, who owns the property. The other types of issues that could occur as well, if the seller is selling through an estate, we have to make sure that they have the proper estate paperwork and authority to transfer that property to you without any issues. Thirdly, we handle the preparation of all the legal documentation. And a big part of that is managing the money and understanding what the finances will be. We have to understand what what the land transfer tax is, what are your other legal expenses, and also we cover off all of the requirements that your lender has, because most people when they buy a home, they usually have financing. So when it comes to financing, each bank has their own requirements, and they all have paperwork that they require. So we ensure that the bank is satisfied and we manage the money from the bank in order to process the closing. Finally, on the actual closing, we manage the money. We send it securely to the other side. We look out for any issues on title, even up to closing. And we finally register the property in the client's name and make sure title is clean. We also order title insurance for our clients to make sure that they're covered for any unforeseen issues that might still be on the property going forward.
So that's a mouthful. But I
Yeah,
would say that I would say the most important thing that I heard out of all of that, and which most of the clients that I get, because typically I'll get clients after they've been shopping around and found a house, so they don't have a pre-approval, they're out there shopping, and sometimes I'll get clients that have an offer with no condition of finance on it, and now we got to come up with funding. And what
yeah.
I heard you say is get involved early. I agree with you 100%. I think you're paying for a real estate lawyer to help you in the most important part, and that's prior to signing an agreement of purchase and sale. It's like actually looking
Exactly.
at,
Once
right?
the agreement is signed, I can't change it unless the other side is willing to amend the contract. And usually once you have a firm deal, no one's really going to want to change anything
Hmm.
unless more money's involved or someone's going to give up something. So ideally, you want to get your mortgage pre-approved well in advance, so you know what you're getting into, and if you have the money. And two, having your lawyer really be involved with contract negotiations from the get-go, because once you sign that agreement, the lawyer is bound to deal with the agreement that you signed.
100%. So leads me kind of then the next section. Most of this is going to deal with first-time home buyers, but I'm sure there's a lot of homeowners that are going to have lots of questions as well that we'll answer. But what do you think are some of the most common legal issues that you see with first-time home buyers when they're buying their first home?
So I think with first-time homebuyers, there's generally a little bit of like they don't have as much knowledge as someone who's already owned a home of what things to look out for. With home ownership comes experience with things to look out for, particularly in terms of the structure, what types of things to watch out for in terms of a building. So I always recommend getting a home inspection. So a first-time homebuyer should have a home inspector because not everyone is in the trades and they may not understand plumbing or certain issues that could be major expenses for them in the future. So they need to know the type of building that they're getting and the type of property that they're getting, particularly if it's an older building as well. When it comes to legal aspects, the real estate lawyer, our job is to help our clients understand what they're getting into. So first, we do check title issues, but again, that's standard for every type of transaction. Someone who's new to the home ownership world is they may not understand that there are zoning restrictions with regards to types of properties. So if a property is a triplex or a duplex, zoning is very important because if you're planning to rent out part of the property and the city hasn't zoned that property to be allowed for a multiplex, then you're going to have trouble. You might have to go through getting a variance on the zoning, which can cost a lot of money, and there's a lot of uncertainty because it's up to the municipality to process. With regards to condos, first-time home buyers, and generally any buyer, they need to know what they're getting into when it comes to the condo fees. Are there any special assessments? So special assessments are condos expenses because the condo is like a collective. So all of the expenses are shared amongst all of the owners of the condo. So if they have an unforeseen expense that they never really planned for in the budget, it may become a special assessment, which is an added cost on top of the regular maintenance cost for a certain amount of time. It could be several years. So that could be a lawsuit that they weren't anticipating and that their insurance doesn't fully cover. It could be other major repairs that they just weren't, planning on dealing with. Well, maybe they were planning to deal with it 10 years out, but for some reason it's come up now, like the roof or the cladding on the building has started to fall apart, so they need to spend a lot of money to fix that. Or a lot of condos have this issue called high-tech plumbing. It was a problematic type of plumbing. So a lot of condos have had to spend money to retrofit and remove that type of plumbing that caused issues in those condos. So things like that can come up. Okay, yeah. So another thing is just making sure that you involve all of the professionals that you work with, be it a mortgage broker, insurance broker, and lawyer early on so that they can give you advice as you get into the deal. And that way you have the professional advice from people who deal with real estate transactions on a regular basis. And finally, understanding that when you buy a home, you need to understand the property tax assessment of how much the property tax will be, how much has the property tax gone up historically, what's the budget expected to go up, so you can budget for these things as well. Because with home ownership comes many other expenses, including property taxes and maintenance.
So speaking of that, I know we're gonna come a little bit off topic, but I've got a really good question here, and I want to talk about a scenario without naming any names. I just talk about one of my clients that I had. So they purchased this new pre-construction, a year and a half ago when the market was raging, and they didn't have when you were talking about property tax, they didn't have a property tax amount, and because it's a new construction, we got to use mill rates. And when they saw the mill rate, so my property tax in my area, and their house was literally across the street a little bit, maybe down a few blocks, and my property tax $4,400. Guess what their property tax was that they had to come up with and use when I had to use it in their credit qualifications? Just guess.
I'm guessing 5,500.
Yeah, $13,000.
Oh my goodness!
Yeah, so we had to use the mill rate on $1 million, and it was like,
Wow.
yeah. So that's one of the things I think people need to be aware of, and that's what's good about bringing in a mortgage agent, bringing in your real estate professional plus your lawyer, is these are the things we can talk to you about before you sign that contract. You need to understand these things. Yes, that might look like a good pre-construction deal at the time, but you need to understand is what's going to happen a year from now. Are you going to be able to qualify? And where based on where the rates are going to be, not where the rates are now. And then what I want to
Definitely.
talk about is what happens. What's the legal ramifications for those clients, Rashesh, if they sign that contract and now they can't come up with the money to close?
So there's two things. So one, I like the fact that you brought up new build contracts because they are a different species compared to other types of contracts when it comes to resale homes.
Mhm.
Dealing with the builder is notoriously the contract is notoriously in the favor of the builder. So they usually give you a cooling off period where you can go check with the lawyer what the agreement is, and not all builders are the same. Some builders really put in really unfair types of clauses where they'll say that they can increase the price if the cost of the materials goes up, and if you sign that, you're bound to it. The other thing is like, at the time when you bought the pre-construction, you may have gotten a pre-approval or like a pre-approval from your lender, but with the markets changing, that type of arrangement may not work out at the time. And I've had that situation come up with clients, unfortunately. And at that time, if they can't come up with the money and the lenders appraise them as lower because the market's come down a bit, and they don't have enough money because the contract they agreed to is higher than what the bank is appraising the property at, they now have a gap that they need to come up with. So likely they need to find an alternative lender, maybe a B lender, which might have more higher interest rates, or even possibly a private lender. And finally, if none of those options work, they'll have to forego their deposits and lose a lot of money. And I've had clients lose substantial amounts of money because they were not able to close, particularly on a new build contract.
I heard, and correct me if I'm wrong on this one, that let's say in this scenario, appraisal comes back, they bought a house at let's call it $1 million. Appraisal comes back at say 850. So now they're going to make up the gap. Here's the
Yep.
problem with the lenders, even the private lender alternatives, is they're going to only lend to a certain percentage, like 80% loan to value, right?
Correct. So
So it's
you're still
loan to
stuck
value
with
based
a
on the
different
new
lender.
appraisal amount. So now there's still that $250,000 gap between what the purchase price that you need to get versus what the lender's going to lend to you. Now, what I've heard, and maybe this is incorrect, but what I've heard is that the not only can the builder, keep your deposit if that's in the contract, but they can also sue you for the difference of what they had to sell it for because you couldn't close. Is that true?
Correct. Yes,
Yeah,
that is correct.
yeah, that's huge.
So
So
whatever difference and that goes for any real estate contract. So if you fail to close on a deal and then the seller has to go sell to a third party and they sell for less than the original contract value that you agreed to, they can sue for the difference.
yeah, and again, that's why it's so important to have Rashesh in your corner right away before you sign that contract,
Someone like you
right?
is
And
make
so,
sure that you understand that rates change,
mhm.
approvals change, that's set in stone. And that's a really big risk when it comes to new builds, is because sometimes these construction projects aren't closing for like 4, 5, 6 years. So by that time, the landscape has completely changed, the market has changed. So you are taking a significant risk. And the other thing is, even if you do, like, there are even construction projects that don't even close on on the builder side. They just don't have enough people buying, and they decide to terminate the deal. I've had clients call me like, "Hey, what can I get for my money? All they've been holding my deposits for 5 years. Really, not much. They're not really required to hold or give you much interest at all. So you're really kind of stuck with the builder once you get involved with them. And plus, a lot of times people come up with builder contracts, and I've never heard of some of these builders ever. And a lot of times builders actually use shell companies because they don't want their main company to be bound to that project. So they'll use a specific project company. But you really should inquire as to the history of the builder, what's their timelines for actually completing projects. Have they canceled recent projects at any point? So this is a really big thing that especially first-time home buyers should really consider.
That's great advice. Great advice. So I'd like to talk a little bit about the closing day. Okay, and then I've got some
Yeah.
questions around that. But let me set it up though. So here's what happens, and I know a lot of my clients. I always vaccinate them, and we talk a little bit about, hey, you're going to sign a bunch of paperwork with me, and then you're going to sign all again with the lawyer. So when I get a commitment from a lender, it's pretty much all the information that contains in the mortgage, the conditions that we need to meet before we go broker complete, and before they'll start instructing the lawyer. So we're going to sign all of those things. We're going to do a know your client form. We're going to do borrower's disclosure. We're going to sign the application. We're going to sign a commitment and some other documents too, depending on each lender. And once I've met all the conditions and we're good to go, then the lawyer gets instructed. And let's say this is like a month out. So what are some of the things that a first-time home buyer needs to prepare for after we become broker complete? We've met all our conditions, and they're basically, the clock is ticking before closing.
So, sorry, just to summarize, so you're looking for like what type of documents they're expected to
No,
complete on closing?
yes, yeah. So, what kind of documents do they have to sign? When do they sign them? And then we'll talk a little bit more about closing day, because I think that's a big kind of anticipation for most first time home buyers, is what happens on that day, and we can talk a little bit
Sure.
about that. But just what sort of documents should they get prepared for, and when would they need to sign them after they've signed everything from me?
Yes. So you want to make sure you have ID that's up to date because banks and the Law Society were required to verify our clients and ID our clients. So if you have ID that's expired, we can't accept that. So that's one big thing I would say to, and you need two pieces of ID. We can't accept a health card. Ideally, if you have a passport and a driver's license, that's great. Otherwise, one picture ID, either a passport or a driver's license or the Ontario photo card, plus a credit card or bank card from a Canadian bank is acceptable. And we can also take a birth certificate and other types of ID. With regards to the other documentation, the lawyer's responsibility is to prepare all of the documentation. A lot of the documents are from the bank, making sure the bank is satisfied. The bank may want sworn statements when it comes to they want you to confirm that you're not going to. Sorry, I'm just gonna. They want to make sure that you're not going to have a second mortgage on the property, or that you're not renting out the property. They want to make sure that it's owner occupied. They may also ask about your marital status, particularly if you're recently separated. They may want you to make a statement with regards to, are you paying any support payments to your ex-spouse, things like that. But yeah, and then some of the other documents that we prepare for our clients, the big ones are direction retitle, how you want to take ownership of the property. So usually we can say that you want to take it jointly between you and the other owners. What that means is if any owner passes away, the surviving owners get the house without having to go through the probate process or paying a probate tax. The other option is tenants in common, which is each person takes a percentage of the property. When that person passes away, their share goes according to their estate, so they need a will at that point. So those are the major documents that we usually complete on the purchaser side. On the seller side, we look for a certain set of documents. They have to make certain statements that they're not foreign. And that's the other thing, even on the purchaser side, that they're not a foreign buyer. That's another big one right now, because there's a foreign buyers ban. So we need to make sure, and you're going to make statements and sign documents to that effect as well. And we also confirm the deed and the mortgage that we're going to register on your property before we register it. And we do it at least a few days before closing. Usually, like no earlier than a week or a week and a half before closing. To, I would say, not more than like less than 24 hours before closing, because we like to be prepared.
Right.
And then with regards to the actual closing day, our job as lawyers is to exchange documents, give the money to the seller side. The seller side verifies that they received the funds, and they'll release the deed on the Ontario government land registry system, which is all online. So we just have to complete it. And then I would register if I was acting for a purchaser, and then we'd have a final deed that is registered with the serial number. There's a registration number, and you'll have a registered mortgage as well. And then that would be your proof of ownership. And then finally, we also update the municipality with regards to the change of ownership, so the taxes can then be changed. And with regards to keys, there's since COVID, before COVID, we would always have to courier or we'd receive keys from the seller's office by courier. No one's really doing that anymore. We all do a lockbox. So we usually get a code at the end of closing, and we can give that code to our clients once we're fully registered, and then they can go to the property to open the door and access the property.
Yeah, that sounds about right. What I always say to my clients is, look, don't expect anything to be happening first thing in the morning. Expect to get your keys at the end of the day. A lot of stuff has to happen on closing day. And the other thing is, I say is, don't book your trucks to move in on the day of your closing, right? Like there's still so much that could happen. No point doing that. And then, you
Well, they
don't,
might have to if there's a same simultaneous closing, right? If they're going
yeah,
to move out of
yeah,
one, then they have to get to the other property. So
yeah.
that does occur sometimes. The only thing I would say is, yeah, I would agree with you about timing. Usually, most closings occur sometime in the afternoon, and that's usually because in the morning we're usually waiting for lenders' funds.
Hmm.
We're with TD, so we usually get TD's money like first thing in the morning. But depending on the bank, we may not get money until 1 o'clock, 2 o'clock, sometimes later.
I've had
So
that
and then we
four
have to
o'clock.
hound the bank and be like, "Where's the money? Where's the money?" And then so it really depends on once we can get everything together. Plus, the other side may also be busy. The other lawyer might be in a meeting. They can't release the deed for us to register right away. So there's a lot of moving parts, and each lawyer's office usually has multiple clients to deal with in a day. So timings can vary between an hour or two here or there. But generally, before 5 o'clock, we usually try to wrap things up.
Sweet. Can we talk a little bit about costs, more on the closing costs, and managing the expectations? I've had times where clients have come to me in the past and they've said, I wasn't expecting this. I wasn't expecting this when I bought my first house. I don't want to go through that whole hassle again. So I talk a lot about, even my app that I use breaks down all the closing costs, like transfer tax and disbursements and stuff like that. So it breaks everything down. But I'd love to hear from your point of view. Is there any best practices, or um, what type of budget should people put aside for closing costs and managing the legal costs of closing a transaction?
Yeah, I would say like it obviously helps to be informed with regards to all of the different aspects of the closing because like even when it comes to a lender, they might have a lender fee that you have to pay or you have to pay a broker fee. So that's another cost that you have to factor in that you may not have thought about before. But when it comes on the legal side, we try to be upfront with people because I personally like a practice where everything is upfront and our clients know exactly what they're getting. And I try to give all the different scenarios in our retainer. So, for example, if we get mortgage instructions really late, like the day of closing or the night before closing, and we have to we're short, we have to make sure our staff stay late to really get the job done, then we're going to probably charge you an extra fee because now there's more work for us to do. So things like that, like I give people the different scenarios of where additional fees may occur, and I try to educate people that they need to, keep us aware of different changes in your contract and things like that. So when it comes to fees, it depends law office to law office, obviously, but our practice is to really put everything in the retainer to really explain every possibility. Our retainers are long, but we really try to make sure that our clients are well informed ahead of time before signing up with us. Because at the end of the day, I like my clients to be, to trust me and to accept that, like, yes, I've always been upfront with them and they know exactly what they're getting into. When it comes to budgeting, so there are certain costs. So disbursements vary. Some lawyers do flat rates where they'll include all of the disbursements, so their fee will be higher because they've incorporated all of those expenses. So disbursements are fees that the lawyer incurs on your behalf, but they're not fees that the lawyer makes money on. So, for example, the lawyer is charged for an incoming wire fee, or there's a software fee. Certain banks use a certain software platform where they charge a fee just for us to receive the instructions. Like a lot of time, it used to be $69. They vary depending on the type of software the bank uses. So those types of fees we pass on if we get charged by the bank. And then some of the other fees that we charge in terms of disbursements are like if we have to courier something, the courier cost will pass on to our clients. The searches for title, they vary depending on the property. Some properties, the searches can range up to $200 to $300, depending on the number of searches we have to do. Some properties, it's as low as $50. So it really varies. So those fees, we don't make money on those. Whatever we get charged by the province or a third party, such as a bank or a software company, we pass that on to our clients as a disbursement.
And then for the explain how the first time home buyers plan works. So there's a rebate that they can get. How does that work upon closing? Is there anything the lawyer has to do with, or is there
Yeah,
anything the
so we
client?
check
Yeah.
off on the actual transfer on the deed. We check off the statements that allow for the refund to be applied on the closing day. So when we calculate the amount of money that we need, so we do what's called a trust ledger or a statement of disbursements and receipts. So whatever we receive from our clients and whatever we receive from the bank is a receipt, and when whatever we have to pay out to the other side for the home, the land transfer tax, the legal fees, we balance it out and we'll let you know how much shortfall we need in order to close. And whenever we have a first time home buyer, we do include that rebate. Depending on the percentages, sometimes only one buyer is out of two buyers, only one qualifies for the rebate. So we can get $2,000 back if they're 50% owner. If
Right.
their percentages are lower or higher, the rebate changes. But basically, the maximum is $4,000 per transaction. So that's the most that we can get.
Now, is that collected right there on the spot and saved there on the spot at the lawyer? Or is that something that they have to submit for a refund when they do their tax
No,
returns?
so we handle the process right on closing. So you don't have to worry about having to pay that and then get reimbursed by the province.
I learn a new thing every day. I learned something today, Rashesh. I did not know that.
Oh, that's good.
Yeah, that's
Yeah.
awesome. That's awesome. So, and I also learned another thing too from you today is I learned that if one person is a first time home buyer and the other one isn't, you can still get 50% of that, so that up to $2,000 in savings off the land transfer tax. Is
Yeah,
that
so in
correct?
that scenario, that's assuming they're both joint, meaning they're both 50% owners. But let's
Yeah.
just say we make one of the owners 90% owner or 99% owner, and we only put the parent as a 1% owner. We have a lot of cases like that where a parent has to come on title to help the child qualify for their first home. So in that case, the 99% will be almost $4,000. So we're able to maximize that rebate in favor of the owner who's going to have the majority ownership anyway. And the parent's really only there as a trustee, as a bare trustee to help the child qualify for a mortgage. So in that case, we're able to maximize the rebate.
Nice. Well, I know you weren't prepared to talk about this, but since you brought it up, I'd love to learn more about that because I've had two situations in the last week where I've had clients where one, I think you and I talked about it. It was a friend of mine I used to work with years ago, wanted to transfer title to their kids, and I'd love to maybe learn a little bit more about how that works and how long that process would take, like in order to transfer one out if they did that.
So before we can even transfer title, if there's a mortgage on title, we can't touch the property without having that existing lender authorize the title transfer. And if they're not willing to authorize it, then the family may have to refinance and get a new lender. So pay out the first one and put on a new one that's accepting the new type of title change. If there's no mortgage, we can obviously change title at any time. That's not a problem. There are tax complications that could possibly come up with that. So anytime there's a title change, particularly if it's a gift to a child or something like that, I strongly recommend my clients seek tax advice through a tax professional such as an accountant. I have tax knowledge, but not so much that I could put my professional opinion on the line. So I always say it's best to have people that do tax and that's their full-time job is to deal with tax all the time. It's best to talk to someone like that because with tax, there's so many little nuances. There's always, bulletins and new interpretations by the CRA, and the rules are always constantly changing. So the people that do that, they're usually on top of that, and that's their full time gig. So I always say it's best to have someone like that give you tax advice so you don't run afoul of any issues with the CRA at a later time.
Great advice. Very nice. I say the same thing. Especially when they always ask me about first time homebuyers plan, or how, like, as a mortgage agent, I'm not licensed to talk about that. I can talk to you about how much you could use potentially, but I couldn't
Yeah.
talk to you about the system. And you always got to seek professional advice, because that's they look at all of that, they know that, and they'll be able to protect you, right? Where really we're just involved in the process. We don't have the professional knowledge to answer the question, right? So
Yeah, and another point about that is like the people that you're relying on, like be it a lawyer, like I'm licensed and I'm also insured for what I say and what types of opinions I give, right?
mhm.
So when you're dealing with a tax professional, you are going to them so you can rely on that opinion. It's not something you just randomly looked up online and you hope it's the truth, where you may not know all of the nuances or details behind it, or that you may not know it might be outdated advice, right? So you want to make sure you're really on top of it. Even now, there's a new budget that the government has passed. The capital gains rules have changed. There's a
Mhm.
lot to know and there's a lot to keep up with. So having a professional is money well spent to make sure you don't have more expensive problems in the future.
100%. I do have just one more question that maybe you can talk to, and that is, what's your last piece of advice that you would give first time home buyers?
Um, I think again, just relying on and leaning on professionals is huge, right? Because a lot of time, and like not to like badmouth any realtors. Like I have a lot of great realtors in my network, and I work with realtors. But sometimes the realtor may not know contractual negotiation or mortgage information as well as someone who does that as their full time job, right? So I would say, don't feel bad about having to rely on a different professional, even though your realtor is spearheading the deal and they're dealing with the transaction. I would say it doesn't hurt to have multiple people help you at all times and to really just understand what you're getting into. So you have to understand the different types of costs and like home ownership, just really understanding that like once you buy a house, it just never ends when it comes to things that break down. You always have to fix things. There are things that happen that are unforeseen. So, as part of the budget, I know it's very expensive to buy a house right now in this market, and the mortgage rates aren't the friendliest as well. So, budgeting, I know a lot of people are spending almost 50% of their income on trying to buy a house. But the strong thing, the one big point I would say is like, okay, but once you have that house, also know that you're going to have other types of unforeseen costs and things that you need to keep an eye out for, and also to have almost a savings account for, because like one day maybe the roof has a problem and you got to replace the roof, or you got a plumbing issue and you got to spend a few $100s on plumbing. It never ends with a house because it's just constant maintenance. The other thing with property taxes as well, right? Like I think the city of Hamilton this year increased property taxes. I think it was 7%.
Mhm.
Usually it's only 2 or 3%. So things like that, costs just keep going up and up. So really budgeting, really understanding what you're getting into, so you're not, you know, overwhelmed or having too much pressure to manage a home.
Yeah. And my last point is exactly what you said in the beginning. It's a lot easier to say no than to say yes and then be in a lot of trouble once you sign that contract. Like, don't be afraid. No question is a stupid question. Don't be afraid to reach out. Rashesh is an incredible lawyer. We're texting all the time. He answers questions for me and my clients. He's very responsive. I love referring to him because I know my clients are going to be in good hands, but more importantly, the communication is great. So I would say, like, make sure that the number one thing is get pre-approval, but right after that, find a really good real estate lawyer like Rashesh that you can work with and trust, that'll help you and give you a second opinion on those contracts before you put some ink or DocuSign on them.
Yes, yeah. So I just wanted to touch base on the differences between types of lawyers. So there's two types of lawyers that everyone in Ontario is called as either a barrister and a solicitor. So those are the two different hats that lawyers wear. A barrister is a lawyer that goes to court and fights for you in a court setting or another type of a dispute resolution process. And a solicitor is someone who handles contracts and paperwork. So my job as a solicitor is to help prevent you from ending up in front of a barrister as much as possible. So that means that I am trying to reduce your costs and headache and heartache so you don't have to end up going in front of a court and trying to fight out an issue. So if the contract is done properly and the issues are covered properly, hopefully we've reduced the need for having to go to court to have to deal with that issue, because going to court is very expensive, and the barristers that you will end up having to use if you have to end up going to court will charge you far more than a solicitor ever will.
Great advice. Well, I want to thank you so much, Rashesh, for joining the YouTube channel and coming out and answering all the questions for my viewers. Any last final thoughts?
No, I just we have an open phone and door policy with people. We're happy to take initial consultations if anyone has any questions. We have a very friendly way of working with new clients as well. So anytime someone has a question or needs some assistance, we like to be a resource in the community.
Well, thanks again. And I'll provide all of your contact information and how to get a hold of Rashesh in the description notes. And once again, thanks a lot, Rashesh.
Thank you for having me. I really appreciate it.
Bye for now.
Thank you.